Well. FOMC. Boy, it has been a very interesting day. I've kept myself occupied, stayed away from the charts because it just looked, I've missed out on beauty. I missed out on it, but never mind. This is what happens, But looking at the things across the board, Bitcoin making a nice little flavorsome move to the upside. NASDAQ pumping up 21,200. I'm keeping an eye on that bad boy right now. And the S&P as well, just going for that 6K. Did it take the 6K? It took the 6K, but didn't quite make the 6K in principle. What is this? What's going on here? Can you guys... wait there. What the hell? Regardless of that, ladies and gentlemen, I hope you're all doing well tonight. So, FOMC, which will be in roughly 25 minutes, which is the actual federal funds rate. We're looking for a cut. And on top of that, we're going to be getting the FOMC statement itself. Now, looking at things across the board, could you imagine? Everyone's anticipating the rate cut. Could you imagine that Trump has effectively gone and whispered a couple of things in Powell's ear and said, don't cut? Do you understand what that would do to the market? It would completely go crazy. Now, we're about to get a Fed rate cut. Everything is at all-time highs. It has got people baffled. But with that being said, is there still more room for flavor to the upside? Well, that's what we're going to work out tonight, ladies and gentlemen. We're going to be monitoring what Bitcoin's doing, what NASDAQ's doing. We're going to pay attention to the bonds, the yields, and all of that fun and games. Then about 7:30, which will be in around just under 50 minutes time or so, we're going to have the actual press conference with Jerome Powell. And we're going to listen in on the flavor. So with that being said, ladies and gentlemen, let's get with the program. Let's understand what we're going to be expecting. And then we can let's just see the chaos unfold. All right, here we go, ladies and gentlemen. Welcome. Good evening, good afternoon, wherever you are. What happens if we don't cut rates? Literally, this is what I was just saying. If we were not to cut rates, that would cause chaos in the marketplace, absolute chaos. And that would be every reason for Bitcoin to keep going up, all right? Because then people are like, what the hell are they doing? Why are they not cutting? And then fiat then becomes something that everyone loses confidence in. So naturally, you'd expect Bitcoin to go up. But if Bitcoin's following the NASDAQ and the S&P and all the guys that are buying all the BlackRock ETF story, that's going to be a bit of an issue for us. So that means if the NASDAQ does correct aggressively, Bitcoin will follow suit. So if you are in profits right now, guys, take some. No one went broke taking a profit. No one did. So just practice capital preservation, ladies and gentlemen. All right? Cool. What's he winking for? Why are we winking? My days. Let's get with the program, gang. All right, then. So, NASDAQ, look at that. Beautiful move to the upside. Currently hit the high ADR. You've got Bitcoin over here sweeping the good old Asian session range to the upside. 3 green vector candles, not quite closing as strongly as I'd expect them to be, but this is what I like to call green vector candles coming into play and not going anywhere. Okay? Now, we've seen a little bit of success today in terms of trade setups per se. So we wanted to see Bitcoin initially, make a move to the upside. So this is the trade setups that I send everyone in the morning. First one was Euro. It's made a beautiful move to the upside. And I said to them, if you can retain and hold on to it while it recovers the vector candle, I said, take some profits at the 80200 zone. All right. So we quickly go over to Euro itself and understand what the story is. Then you can see Euro has made the recovery to the vector. And if you took the profits at the 80200, you would have paid yourself nicely because it did actually retrace back into it again. Managed to clear out the 80245 region itself. Going into other assets just to make it even easier for us. So we wanted to see NASDAQ in principle try and come down, but it didn't come down to go and take the 21,172 zone. And you can see that NASDAQ itself has taken, in principle, it has swept the 21,202 before it's now made a little bit of a reversal to the downside. Okay, So that's happy days right there. But I think the star of the show for me would have to be BTC. All right. So this is Bitcoin. What we wanted to see Bitcoin doing initially was to try and come back down and stay within the block principle, as you can see, between 74,358 and 73,072. Now, what we did see Bitcoin end up doing is it came back down in towards that region-ish, but then to make the reversal to the upside. So the lowest point right here was 74,480. Now, if you managed to capture that, it would have been a tight squeeze because it didn't even take the Asian session. But the narrative was I was expecting Bitcoin to take the Asian session high and then, of course, go and take on the 78K is what I would be looking for in terms of an optimistic setup, okay? But right now, Bitcoin hasn't taken that zone just yet. But if you are in profits on Bitcoin, try and consider taking some off the table, okay? Now, going into the stock market and what's going on over there, stocks rise as bond yields sink. So we go and have a look at the bonds and the yields themselves. What's going on over here? So we can see NASDAQ's not really doing the flavor. It's pulling back ever so slightly. Yeah, I'm just not liking this when we're going into all-time highs and then we've got the Fed pivot, or sorry, we've got the Fed rate cuts as such. But going into the bonds and the yields, you can see the bonds are still maintaining this gap right here. And then we've got like what would appear to be bonds looking like they want to try and climb higher. But what I like to do is I like to go and have a look at the yen. Now, the yen is going up, and that's a problem for me. Because if the yen is going up, then that only means that carry traders are actually taking profits, all right? So then that could mean that someone might not be liking the idea of these rate cuts. Something is going to be said in the FOMC statement that could pose as a bit of a risk for investors. So the logic is that if the yen is going up, then that would only imply that guys are selling dollars to go into yen. And they've been doing that all day. Because look, the dollar has been going down and we've got a little bit of a gap for us to try and take out. Now, fundamentally, if Bitcoin, or should I say the dollar, continues this narrative to the downside, fundamentally, by the principle of correlations, you'd expect Bitcoin to move back up, okay? So by looking at the dollar, you can see there's this gap right here, okay? Now, if the gap does come into play, dollar goes down, Bitcoin in principle should continue to the upside, all right? But something you've got to be mindful of, Bitcoin sometimes tends to move a little bit slower than the rest of the asset classes. You go over to the NASDAQ itself and you can see NASDAQ does move pretty aggressively, all right? And I'm not even going to consider it when you go onto the depth of market at how fast it actually moves. So you've got to really watch out. And those of you that might be trading through TradingView and then I've traded a couple of times through TradingView itself. And what I find is it's a little bit laggy, all right? So if you're ever going to be trading NASDAQ, my opinion is you trade it through the depth of market and you trade it through platforms that provide you the CME data, the futures markets like NinjaTrader or through Jigsaw when you merge up all your accounts. And some of you guys that trade on funded programs like Top Step Trader or Apex and what have you, trading through TradingView, it's sometimes a little bit slow, you know, and that's just my opinion. It might work for other people, but hey, that's just my opinion, okay? But looking at everything else across the board, it looks like it's kind of nice. I mean, Solana's doing wonders. There's that $200 mark to the upside. Did we want to see Solana take out that $200? Yes, we did. We wanted to see, yeah, we're so close to $200 on our setup. So we cleared the 191. We're going into the 196. Oh, just about taking the 196 projection point. And $200 is not so far away. So it's going to be a nice little move if they can retain this. Ethereum, all of a sudden, Ethereum's decided to wake up. And again, hasn't taken the Asian session. This is what bugs me about Ethereum, man. It just takes bloody forever to move. I don't believe this asset. Honestly, I don't believe it. 55, it's still there, man. Honestly, I don't get it. I really don't understand it. Anyways, okay. So going into the calendar, this is how it's going to be structured. Federal funds rate, 4.75, 25 basis point cut. That's what we're looking at. Then we've got the statement itself. The statement, we're going to be looking for keywords on if we get a dovish approach. Because we're getting 25 basis points. The market wants to know, are we going to get any more? Now, remember, September 2025, they're expecting 100 basis points. So if we do the math correctly, that means it will take us down to 25 today. Going into the next meeting after that, another 25. That gives us effectively 50. And then that will put us at 4.25%, sorry, 4.5% when we go to December. And then another 50 basis point cut from that point will take us down to 4%. Now, is that going to be the sweet spot for inflation to come down? Thing you've got to take into consideration with inflation, guys, is this. Oil has been climbing up, okay? Has been climbing up, and it hasn't really stopped moving up, but that could be because China's actually getting some stimulus package that could be actually working, okay? So if oil keeps on climbing up from 29th of October to this point, when we get the next reading of the CPI data, is that going to show inflation? Is that going to show the cost of oil going up? Okay. So it's going to be very interesting to see how the Fed is going to respond to this in the sense where what inflation could effectively be like in the near term. Okay. And then after that, guys, it's the press conference. We're going to listen in on Jerome Powell. So what we're going to do right now, guys, we'll just sort out my stuff over here. Okay, let's just split these charts up. Keep an eye on what's going on. Bitcoin to the left. Can you see that clear? Awesome. How long we got? 10 minutes. Okay. So any questions, ladies and gentlemen? What if they don't cut rates? Look, listen, if they were not to cut rates, which would be absolutely chaotic, the last time the Federal Reserve held a meeting, right, and they changed the approach of what they did, okay, that was in 1994. So they were aggressively increasing interest rates, and the market was expecting to increase them again, but they did not anticipate them to increase it so aggressively on the day. And that day it was increased by 0.75 basis points. So 75 basis points out of nowhere. They were like, what the hell are you doing? That created the bond massacre. The bonds slumped to the downside. Okay. I'm live. What a guy. What a guy trying to interrupt me on my live. You're asking me this question when I've got 1,800 people on the live. Do you want to just ask that later on, bro? Okay, you do that. Bless him. He's a good kid. I don't believe that guy. I'm going to destroy him. Any other minus 25 basis points coming? Yep, that's what we're looking at right now. So now it's just down to how many times does the market need to link Crazy Gary, the egg, against the forehead. I'm reading the wrong things, man. You guys are coming out with some funny stuff. Okay, then. So any other questions? Exo charts or DX feed? If I could only get one right now. Well, Exo charts is in, well, DX feed is inside of Exo charts. So you get Exo charts data for crypto free of charge. So take that into consideration. It's don't worry, it's the old man. Show me NASDAQ on BTCC already. That would be right here. Oh, we're getting some flavor right now on NASDAQ. Oh, my days. NASDAQ is pulling some nice flavor. Here we go. So you go into BTCC, click the top over there. If you want the link to this bad boy, it's in the description of the live stream, and you want to click Tech USDT. Okay, so Tech 100 USDT. And you can see right there, it's actually now making a bit of a move. And with this platform, guys, you can effectively hedge yourself. If you're in a position on Bitcoin and it's not working for you and Bitcoin's just trailing sideways, you can jump over to the NASDAQ and you can trade that volatility. Because look how quick, look at that, how fast it moves up. Okay. And then look, you got a little Bitcoin just doing a little bit of just a little move. Even look, it's snapping back right now. So you can effectively exploit that with the NASDAQ on BTCC. Okay. Here we go. Got some questions here. Do you think Bitcoin... Where are we at? I'm not used to seeing Bitcoin going up. I'm scared. I just saw a good question there. So do you think Sol is going for all-time highs? Well, it's a case of... Look, listen, we're going to know in the next few minutes if the volatility is going to thrive. All right? They're going to reveal something inside of the FOMC statement that's going to be helping us. Federal Reserve is making a rate cut decision on Thursday. Is the impact on your money? So they're just going to be talking about what is likely going to happen. And remember this, right? When they cut the rates, the yield on the dollar is no more lucrative. So investors are left with one or two things. They're either still going to go into the bonds to lock in whatever yield they can. Alternatively, if you're not going to be holding bonds or going to dollars, what else is there for you to do? The stock market. Literally nothing else for you to do. You know? And that's what we're effectively waiting for. Like NASDAQ is making the move. S&P is still not trying to get up towards that 6,000 zone. Bitcoin's making a nice little pump to the upside, ladies and gentlemen. And it is all speculation. I mean, we got another 6 more minutes until it all actively happens. We're getting a rate cut and the market is already making wild moves to the upside. It's absolutely wild. You'd think everything would be coming down first, you know? So something might be inside of the actual statement that could be compromising something. It just doesn't make sense to me at how aggressively the NASDAQ's pumped. This is Trump trade, maybe. Maybe the market's like, yeah, baby, Trump to the moon and what have you, as if he said that in his press conference about crypto. Okay. Putin is live? What do you mean Putin is live? What's Putin doing? Hold on a second. Not seeing anything. So no more rate cuts from the Bank of England until next year. There's the boy. There's the boy. Let me just see. Oh, we've still got 30 minutes until that madness comes into play anyway. Okay then. Cool. US 30 followed down. Whoever's gifting memberships, thank you so much. Do you think Bitcoin is priced in the cut, so we're bound to have a pullback before 80K region is taken? Great question. I think the thing is with Bitcoin, it's been in such a big consolidation period. All right, look, massive consolidation period. Even when the S&P was making consecutive all-time highs, Bitcoin wasn't doing anything. All right, it was just bouncing around in this range. Now the NASDAQ has claimed its all-time high, and it just seems to keep on going up and up and up. It's not stopping at all. It's like the sell button does not work on the NASDAQ today. Okay. Now, just going over to other assets, just quickly go and have a look at NVIDIA for a second to see how NVIDIA is going to behave. I'm going to pay attention to the volatility index as well. Volatility index is trading at the 15.71 itself. Look at NASDAQ. It just doesn't stop. But S&P still not claimed that 6,000. That is very interesting. NASDAQ naturally keeps on making a bit of a climb to the upside. But it's, oh my days, what is going on over here? Look at that. It's just not stopping, man. Like if you try to short the NASDAQ, it just would not allow anyone. Here we go. 5 more minutes, man. And it's still like, this looks like climatic behavior for me. But I just got to be keeping an eye out on the volatility index. Quickly going into the yields themselves. Hold on a sec. Let's have a look at the yields. Yields are trying to come up a little bit. 4.2 on the 2-year. You want to watch the yields during the time of the press conference as well, because that's going to tell us where investors' heads are at. We need the yields to go down to just sustain the idea of everything going up again. If it keeps on going up, don't get twisted. The NASDAQ is up right now 1.42% and the S&P is up only 0.65%. So it's like it's light across the board. Let me just actually look at something over here. Let me have a look at this. Let's have a look at the volume for today on the NASDAQ. Wait there. Let's have a look. I mean, the volume is there. Look at the volume in the last few hours or so. Look, the volume is there on the NASDAQ. Doesn't make sense why the S&P seems to be struggling at that range. Tina, do you only trade micro NASDAQ contracts or minis? No, I take literally, I'm trading the standards on my normal account, NQ. I trade NQ contracts, E-mini NASDAQ, sorry. Okay. And then I trade on the other platform where I'm trading effectively the CFDs for NASDAQ. Okay. But I'm pretty much done with my trading. Come to the end of the week, make a withdrawal, and then start again next week. Just keep on getting into the habit of withdrawing, taking profits, withdrawing, and just playing that whole game. Okay. Now, here we go. Brother, I'm going to laugh so hard if they don't cut. You know what? If they don't cut, I think it's very unlikely they won't cut because it will really rock the market. What they will say is if the scope for cutting won't happen until next year. So if they say we're going to hold or pause the interest rates and we're going to be relying on data, then okay, that might be a little bit of a problem. So we're going to wait and see how the market initially reacts. I need to get ready for this. I've got my little thing here. I'm going to mark that over there. Okay, then. Whilst we're waiting, ladies and gentlemen, we've got 2 more minutes. 433 of you like the live. BTCC is giving away the memberships, mad love and respect for BTCC. When gold starts to decline, which it is, money flows into Bitcoin and other risk on, and Dixie will drop as confirmation indicator. Principally, listen, right? When gold drops, Bitcoin in principle should be going up. You can't really have gold going up and Bitcoin not going up, but that's what we have seen. And that's what I'm saying about the conventional wisdom in trading right now. Investors are too used to the way gold is as a safe haven, okay? Here we go, ladies and gentlemen. This is exciting. Could you imagine? Could you imagine? Tina, when the crash after rate cut or no crash until 2025? We won't know. This is what I mean. Look, we've had a Fed pivot already. We've already had a rate cut and the market hasn't pivoted, okay? Sorry, no, the Fed's pivoted, but the market hasn't stopped going up. And this is what's got people baffled. The yields are high. The bonds are low, okay? Something's not marrying up. Bitcoin pumping. Here we go. Here we go. They're going to be waiting for key words. Key words. I'm paying attention to the S&P on another chart over there. Keeping an eye out on it. Here we go. This is what I mean about NASDAQ on TradingView. It might be a little bit laggy in that sense. Getting choppy. What we got over here? Looks like it's... Right, we're on. No, 2 more minutes. Forgive me. I was thinking last night, could do a course on the macros and movement of money. I think it'd be useful as reference for us. Okay, Peter, we could try doing that. What do you think about the US buying so many Bitcoin for the reserve? Well, what, with the 200,000 Bitcoin every year for the next 5 years? Again, I've said this before. 200,000 Bitcoin every year for the next 5 years to give them the balance of 1 million Bitcoin, which in principle would mean that they would have to hold the Bitcoin for 20 years. That's what they said. They're going to hold the Bitcoin for 20 years and then effectively try and pay off the US debt. So they're saying that in 20 years' time, the US debt will be $35 trillion. I mean, Trump's going to have to make sure that these tariffs absolutely wipe everyone across the board and generate revenue for the dollar to reduce that deficit. But to assume that the dollar itself, or the debt on the US, is going to be coming down, or it's still going to be at 35 trillion in 20 years' time, I don't know, man. That's a little bit rich. Here we go. Here we go. I'm not seeing any news just yet. Should be out now. 1 more minute. Stable inflation supports Bank of Japan's policy normalization. That's okay for us. In what situation of the FOMC results would make Bitcoin pull back? Well, we've just had a gap down right now. Here we go. Here we go. Will there be profit taking? So now the market is trying to effectively price in what's going on the FOMC. Whoops. Something's going off here. Something's going off here. Something's going off here. Here we go. Bitcoin pulling back. We're going to see some profit taking. They are doing some numbers here. It's what I mean about TradingView. It's very, very slow. And I'm looking at the depth of market over here. And I can see, yeah, there's wiki. There's movement. There's movement. There's movement. But I'm not seeing anything just yet. It's not really going anywhere. What is the actual effort? What's the statement saying? Federal Reserve issue statement. Come on, give me something. S&P can't take 6K. Nothing. Price action, not really doing anything. And this is what happens sometimes with the statement itself. Price action just does a little bit of a burp and then nothing, which means that the core of what we want to hear is in the press conference. So the statement's not really got anything. It's not really done anything. Right? Let's just quickly refresh this again. Not really saying anything. Keep refreshing this. Here we go. Right. So what have we got? What was that? Okay. Removed and added. So it says that jobs gains have slowed. Okay, so removed. So that's justifying why we should cut the interest rates even more. Since earlier in the year, labor market conditions have generally eased. Okay, so they removed has gained greater confidence that inflation is moving sustainably towards 2%. Well, that's not good. We don't want to hear that. We want to hear that. And support of its goal. So they're removing quite a bit. Light of the progress on inflation and the balance of risk support of its goals. Federal funds rate by 1.4%, 4, okay, and 5. Waller voting against this action. God, man, they're taking a lot of stuff out in this, man. Taking quite a bit of stuff out. What's NASDAQ doing? Nothing. There you go. That's your volatility, ladies and gentlemen. That's your volatility for the FOMC statement, which tells me now that the press conference itself is going to bring even more volatility. Now, you can see Bitcoin right now is starting to pull back, okay? That's what I'm saying, like, take something off the table. Now, if they're going to be expecting some good news from Powell, okay, NASDAQ in principle should come down. And when NASDAQ comes down, press conference, Powell says something, that should send it all up. But look at how extended we are to the upside. Naturally, you'd be expecting a bit of a recovery. Let's just quickly have a look at what's going on across the board. Let's just have a look at the bonds. Here we go. 2 years moving up, man. That's not good. If the yields are moving up, they're not liking what they're hearing. Bonds coming down. 10-year yield coming up. Volatility index not really doing anything. Let's just quickly go and have a look at SPY. Big gap up there. I'm guessing a lot of options traders are now trying to get into that gamma flavor, gamma negative. Treasury futures pulling back. Dollar dominance pumping up. Euro coming back down. It's one of them ones. So NASDAQ pretty much is holding. S&P, it's not really going anywhere. It still can't claim that 6.5. It's like it tapped it and then it's now pulled away. Bitcoin pulling back quite aggressively, guys. Okay. Viola, mad love for that. So it looks like it's just stalling. Let's just quickly have a look at NASDAQ on the smaller time frame, see how it's doing. Look at that, wick to the upside. The idea would be is that if they've priced in everything, NASDAQ should be coming down and they'll take back their profits. And then whatever good news comes out of the press conference, bring it back up, come back into the imbalances, happy days. But this thing hasn't stopped going up, but we need to see the yields coming down and they're going up. And the government can't sustain that. They can't sustain 4.2%. The US bonds, it's just terrible. It's coming back down again, which means that investors are going to be getting rid of risk. Hold on. No, the yen's going down. So that could support the eye. There could be they could be getting ready because this happened on the election. Dollar started moving up, yen started coming down. So that would support the idea of the carry trade principle. So investors are now borrowing yen to then put that into dollars, to then get those dollars and transact elsewhere. So then that should justify NASDAQ trying to come up, trying to keep moving up. But this wick to the upside, it's not a good idea. It's not a good story. It's not a good story. And NASDAQ will pick up steam if it doesn't like what it's heard. I'm just looking at the depth of market over there. The committee will continue reducing its holdings. Oh, God. And agency debt and agency mortgage-backed securities. They keep on reducing the whole balance sheet, man. Bitcoin pulling back, ladies and gentlemen. It's pulling back. Where's my face? There we go. Okay, then. Any questions? People taking profit doesn't mean you are bearish. Take some profit, open at support. This is true, you know. Just because I'll say to you all, you know, take some profit, it doesn't necessarily mean that you're bearish. It just means that you're taking money out of the market. There's nothing wrong in that. Nothing wrong at all in taking profits. Pay yourselves. Oil moving up? Yeah, oil's pumping up, man. Let's just have a look at NVIDIA, how NVIDIA's faring. Guys, look, man, this asset just doesn't bloody stop. It just says, nope, anything. Give it bad news. Nuclear war attack? Nope. Never mind. They're going to need graphics cards anyway to power up all the computers that are required to do those sort of wars. But NVIDIA just doesn't care. And you got to just watch. This stock is absolutely divine, honestly. Have a look at gold. Gold's starting to pull back. It's made the sweep to the upside, 2,700. Now it's starting to pull back in line with Bitcoin. Just go and have a look at other assets. Apple, see what I mean? Not really. Tech ain't really reacting. They're not really reacting. NASDAQ, not really doing anything. Not really doing anything. Just going into higher time frames on NASDAQ, 4-hour time frame. They've swept that range. Blue vector candle. I'd say you'd want to see a sweep lower, man. Try and get back some of that liquidity and then happy days because you're just going up. And look, it just isn't stopping, man. This thing doesn't bloody stop. I don't believe it, man. Anyways. I think post-election Bitcoin will take the Fed meeting as a catalyst to retrace before to go up again. So, you know, don't you think the oil move up and the market's moving up plus defense stocks moving down kind of indicates that this is still Trump trade playing out? What you've got to take into consideration is when we're talking about the Trump trade, okay, The next principle of Trump trade is the policies he's going to put out. And who's that going to impact? It's going to impact China. It's going to impact the euro. So logic would say that you don't want to be getting involved in the euro. In other words, you want to be shorting the euro, okay? And effectively, dollar's value is going to improve and increase again. Now, whether the participants in the marketplace will say, you know what? Let's use our purchasing power of the dollar and go and buy some stocks. The logic would say that you'd see stocks moving up. But you've got 286 stocks that are Chinese-based listed in the US stock market, okay? Now, if Trump comes along and puts these tariffs, those companies naturally, wherever they're getting their products from, they're getting it from China and know that that's going to cost them a lot of money. Now, shareholders might not like that. Now, the 286 stocks that are listed on the NASDAQ, they make around $800 billion worth of a market cap, right? The NASDAQ's market cap is 25 trillion. So it's not much, but it can still rock the boat a little bit. So that's what the next Trump trade principle would be. The effect that it's going to have with these Chinese tariffs, you know? Bitcoin going to Valhalla, okay, during the stream. Why aren't green vectors getting recovered? It's not that they're not getting recovered. It's just that the way the market's moving right now, this is an imbalance that's been created and it's marking up. Like, look at this blue vector candle on NASDAQ. It's just stalling here. It's not going anywhere. They've got the information they want from the FOMC. Let's just quickly look. Vote in favor of policy was unanimous. Fed removes, here we go. Fed removes reference to gaining confidence on inflation. See that right there tells us that there could be a potential for Powell to say that they may even look to pause. Okay, that could be in scope because they're gaining confidence, removes reference to gaining confidence on inflation. That's not good. We want them to gain confidence on inflation because then that means that the interest rate policy that they're going or the easing that they're doing, or sorry, the tightening they've done has actually done its job. They think that something could impact it. And that is where the Trump trade principle comes in because that could impact the market, the Trump tariffs. That's going to have an impact on inflation. So what's going on right now in the NASDAQ is everyone's like, oh, the market doesn't care. Okay, let's just buy NASDAQ. So NASDAQ just seems to keep on climbing and S&P still not taken the 6,000 zone. So this is going to be very interesting to see how it behaves. Like, look, oh, bit of a sharp move there. Let's go into another time frame, 2-hour time frame. Look, swept. Wicks, vectors, galore, volume rising. Don't even know why it does that. Here you go. Yeah, stop and volume candle. It would need to just completely close above that to sustain the idea of going even higher, you know? But the press conference will bring that flavor, in my opinion. I think it will bring that flavor if Powell does mention anything about inflation and he says that we're on the sustainable path. He needs to sound positive about the path to getting inflation down to 2%. If he reveals anything that would suggest that they're not, the market is going to then look at that and say, nah, we ain't getting the rate cuts that we want, okay? And we get measly 25 basis points. I think they've just cut for the sake of cutting because the UK itself, they've cut their interest rates today, okay? And naturally, you make the assumption as follows. You naturally make the assumption and say, if the Eurozone cuts their interest rates, the UK is cutting their interest rates, Canada, Australia, they're all cutting. Naturally, you think that the Fed's going to come in play. But the Federal Reserve was effectively the last bank, not the bank, but it's the last entity to cut the interest rates for the United States, all right? Maybe it's all the build up to the election, right? But we've had the election now. The only thing left for us to go into is the idea of inflation, the idea of employment. The macros come back into play. But then you've got Trump's policies. Now, Trump's policies are going to take a few months for them to get really put out there. There is going to be a lot of back and forth. Don't think that now that he's president, that's it now. The Trump's tariffs are coming into play. Not just yet. They'll take a few months. And we will know once they roll them out. So it's going to be one of those ones. Tina, should we take out all profits? And if so, when to enter again on Ethereum? So how do I know when to enter again if I took profits? You'll never know when to enter again. You'll never know when to enter again. You've got to enter. That's the basis of it. Okay? You've got to mark up certain things. See, the thing is, right, Ethereum hasn't taken all-time highs. Bitcoin has. Okay? Solana's got a better chance of clearing its all-time high before Ethereum. All right? It just moves faster. But just looking at the way the market's behaving, especially with Ethereum, mark off your vector block principles. Okay? Vector candle block right there for Ethereum. And again, it's how long do you decide to be in a trade for? I don't know what your time frame is. I don't know how long you plan on committing to holding a trade. That's the issue. It's easy to say, when do I enter again? What are you entering on? 1 minute time frame, 2 hour time frame, daily chart, 4 hour chart. To simply say, when do I enter again? I could give you 101 variations of entering at certain points. One would last you 5 minutes. One could last you 2 hours. One could last you 2 weeks. One could last you a year. So, you really got to understand, not understand, but ultimately, you've got to take the trade. You ain't going to know nothing about the trade if you don't take it. And that's the truth right there. There we go. Any other questions? Wouldn't tariffs hurt the U.S. economy? They say it's going to hurt the U.S. economy, but it's going to bring money back to America. That's what it's going to do. And Trump's got a problem with everyone getting it free off the back of the U.S. So he's naturally going to want to increase the value of the dollar. That's his goal. He wants to appreciate the dollar because the dollar itself has just been smacked. And you've got this debt as well, And when the dollar is going up, it's naturally going to be encouraging investors to want to hold dollars. That means going into the bonds. That means reducing the yield. That means reducing the amount of money that the US government has to pay for anyone who's buying bonds. Right now, it's not sustainable, man. How are you sustaining 4.2% on a 2-year and 4.4% on a 10-year? You've had rate cuts. Those yields should be coming down. Something's not working. What? What about the Bitcoin order book, brother? Let me just pull that up for you right now. We're going into the FOMC in the next 15 minutes. Let's just pull that up right now and let's get ourselves prepared for it. What's going on over here? They're waiting for the FOMC, man. They're waiting for FOMC. They're not going to be doing anything yet, which is going to be very interesting to hear how they're going to be reacting, man. Here we go. Here's Bitcoin. Let's pull this up over here for a second. Okay. All right. So here is the depth of market on Bitcoin. Right now, we're currently in a range which tells us that they're happy to pay premium prices. It's expensive right now in value area high. Principally, this area is consistent with reversals, okay? You're currently at the 76,500, which is consistent with market makers in principle selling above that area to effectively mark prices down and then effectively load up as it's breaking down, buying longs, and then trying to break out again to the upside, okay? So you got to be careful here. People that are trying to run longs on here, you're trading all-time highs with Bitcoin. There's nothing for you to go into, which is where you got to start using the block principle, where you mark off the strongest vector candle you can see with no wicks near enough. And that will be this one right here. This vector candle right here is showing strength. They've come back into it, stop in volume, come back up, come back into it. But the problem that I've got is all of these vector candles right here have only managed to clear Bitcoin only a small amount. Look, that's all it's been able to do. All that vector candles, and it's not really done anything. We hope that I don't like saying hope, but the test of the 5 EMA, see that yellow line right there? Let me just get rid of this. The test of the 5 EMA is going to sustain Bitcoin higher. But I don't think they're going to do anything just yet. Look, NASDAQ's not going anywhere. It's not doing anything just yet. All right? So we're just waiting for them. We're waiting for something to be said. Press conference, a few more minutes. Here we go, 7 comments. Anything else? Labor market conditions have generally eased. So again, that's another problem. When the labor market eases, it makes the Fed reluctant to cut the interest rates because they're not being given a reason to cut. If the data comes in and shows that the labor market is okay, like unemployment claims today came in lower, right? If they're not getting that or reason to cut interest rates, they will keep them high until they get rid of this story here of inflation, So it's going to be very interesting to see how this one plays out, man. It really is very interesting to see how it plays out. Are the vector candles as expressive as the volume before them? Was very low. Well, look, candlesticks down here. You see these, right? Those are bar chart candlesticks, volumes, okay? If it's rising as price is going up, that's good news. But the breakout, it's just not there. It's a very small breakout. And that's what I'm not liking. Tino, can you quickly show us the 2020 principle? Do you think the alts will hit the highs from April 2024? I think what we've got to take into consideration with altcoins. Here we go. Here we go. NASDAQ, do your thing. Here she is. Here she is. S&P still not claiming that 6,000. NASDAQ doing the flavor. Oh, look at that. Go to smaller time frames. Have a look at how they're behaving right there. She's coming back into the wick. That's understandable. This is very interesting, man. I'm surprised that the NASDAQ's not done it just yet. The 2020 principle, I'll do that in the next 5 minutes. Would this be a black swan event? Can you really rely on past data? Black swan event, Powell would have to say, you're not getting any more interest rate cuts. That's what he'd have to say. But a black swan event is something that has a very low probability event. And that's what the black swan is. It's a low probability event happening. So what's a low probability event? Nuclear attack, crash in the markets in the sense where an EMP comes along. Someone tries to assassinate someone, all right? There's been a breakout somewhere which has compromised certain government buildings, threats. It can be absolutely anything, right? Listen, they told us that the subprime mortgage crisis had been triggered. There was the crisis. They said, we've got a subprime mortgage crisis. Liquidity is really bad. People are missing payments. Look, the defaults are all here. The market said, nope. Let's just keep going. And they went up for about, where was it? They went up for about 7-8 weeks until the market crashed. So we just won't ever know. Did my 85K Bitcoin change? Well, it didn't hit in the time frame that I wanted it to hit. But Bitcoin will hit 80K. I think Bitcoin will hit 80K. There's a lot of offers up there. Look at that. 3,419 traders were liquidated, wherein Ethereum was 1.51 million, Doge liquidations, 443,000, Solana liquidations, 350,000, Bitcoin liquidations, 339,000. So there's not that many short traders. Not that many short traders right now, but look, you've got a big offer right there, 9 million at 76,990. Another offer up here, 2,078,000. They've got to buy it up so that they can offer it out because that's how they're going to create the liquidity. For all the guys that are buying up Bitcoin as it's pulling back, okay, they're going to be placing orders up here simultaneously. So you buy at 68, for example, and in that order, simultaneously, you're triggering a sell order at 72 or 78. So if someone's now buying Bitcoin right here at, let's say someone's just now picked up some Bitcoin, right? Let's see. All right, so someone's going to pick up $3.35 million worth of Bitcoin. The logic says that if he buys at 75,830, he's going to want to sell. We might see that same order up here. You make that assumption. You're not always going to get the exact figure that the person's order's been placed on. But the logic is that for the guys that are buying up here, effectively getting ready to sell at the same time, because look at the amounts that they're buying. 1 million, 2, 3, 15, 7, So when you're looking for a price point, I mean, look, you've had the sweep of Asia for Bitcoin. NASDAQ swept, just continuously moved up. And you've got the daily open on Bitcoin. Take some profits. You might pull back towards 74. Maybe it could pull back to 74,500. That's still okay. It's still okay. So when it starts going beyond that, that's when we start getting a bit of a problem with the whole story. Where Bitcoin, if it were to collapse from this point and go all the way down to 71, you've just lost the idea of getting closer to 80K, although it's not too far away. And then if it loses 70 and keeps going down and comes back into the psychological ranges, because we've got no news coming out tomorrow, guys. Look, let's just quickly check this out. Anything else that's been said? Yeah, that's it. Nothing else. But look, going into tomorrow, you got nothing. The Canadian dollar is going to be revealing its unemployment rate. Cool. Check out USD CAD and oil. Keep an eye on that. But other than that, there's nothing. So, do you know what? There's been times when FOMC has been dead. It's not done anything. Nothing at all. And whatever they say in FOMC, naturally going to be expecting NASDAQ to try and pull back. I'm naturally going to be expecting Bitcoin to try and pull back because they've marked everything up before the news. Okay? But that doesn't mean the market can't continue to go up. It doesn't mean that it can't. And that's what we've got to take into consideration. Okay. Any other questions, guys? 677 of you. Can we get to 3,000 likes? That would be awesome if we could do that, guys. Can we get 3,000 likes before FOMC? Right. Whilst I do that, whilst you're doing that, let me talk to you about the 20-20-20-40 method. 20-20-20-40 method is a way to distribute your capital when you're buying Bitcoin. Okay? So if you have $10,000, you're going to split that up into two segments. You're going to have the working capital, then you're going to have the cash, right? So the working capital is going to be split by 60%. So you're going to take 60% of 10,000 gives you $6,000. You split that up into 3 increments of 20%. So you're going to have $2,000. 3 purchasing powers of $2,000, right? Now, let's make the assumption, right, that if you just look at a small range on Bitcoin and apply the 20-20-20, let's say you buy Bitcoin with the first 20% here. You've still got the other 20%. So technically, you've still got another $4,000 working capital, right? You buy here again. That's the next 20%. And then you buy here, right? So your working capital has effectively been loaded up into the chart. The idea is that 40% that is left over in cash, you leave it, because that is effectively for an event that will bring volatility. And then Bitcoin's going to start looking like it's going to come straight back up again. You get in with that 40%. And then once you realize a return on that 40%, you get it out. This 40% is short term. The 20% are for a longer term plays. So hypothetically, if you did DCA in Asia last night by the 20-20-20 method, you'd be getting rid of it right now. And you would be making a return. So now your 6K is worth more. Okay? And then you go back again. Start again. Wait for the next pullback. So hypothetically, if Bitcoin's going to try and keep pulling back from this point, you're going to start with your 20-20-20. You're going to say, yep, 20 here, wait for another drop, 20 here, wait for another drop, 20 here. If you then see a bold move to the downside, bang, it does that. You get in with the 40%, load up, and then it ends up moving in your favor. Close off the 40%. Keep your 2020s open. And if price can make the full recovery and some, close off the 2020s, start again. That's how you run with the 2020 method. 20-20-20-40, method. All right, then. 5 more minutes, ladies and gentlemen. 5 more minutes. Oh, my days. Who are we going to see today, man? This is going to be exciting. What we got over here? S&P still can't clear that 6,000. What a joke. Tina, what is the best free platform to see bid-ask live action for stock? It's always going to be delayed. There's nothing that's going to be free. They're always going to be charging people, and you can't get way around it, man. Tina, what do you think the unrealized losses are of the US banks are 7 times higher than... Tina, what do you think the unrealized losses of US banks are? I'll tell you what they are right now. From the last report. From the last report, they're around 516 billion. And they were at 252 billion in 2018, and the market crashed as they went into the final quarter. But not this time. Not this time, ladies and gentlemen. 516 billion is not enough. Doesn't make bloody sense, if I'm honest with you. Breaking. Federal Reserve cuts interest by 25 basis points. Yep. Okay, cool. All right, then. We're going 4 minutes into it. I'm going to get everything set up right now. I actually think that these guys... let's get this. Okay. Where can we see volume velocity? Huh? Tina, where can we see volume velocity? Oh, I don't know about that. He's going to mention the storms. Yeah, he is going to mention that the storms have affected the labor market. I know that's going to be said as well. Calendar. Come on, man. Here we go. All right, and so there's two ways that I can watch it. Just got to be careful with this now, just in case it actually pops up. Right. Here we go. I think we're going to do it for YouTube. Yeah, we have to do it for YouTube. Press conference right there. All right, then. Please don't play it. Please don't play it. Here we go. Surely it's not live now. Surely it's not live now. Surely it's not live. Come on. Might need to kill that. Yep. I think. Oh, come on. Come on. No, 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 no. Put that there. Kill that. Awesome. Okay, then, guys. So this is how we're going to roll it. We're going to put Powell in the middle. We're going to have Bitcoin on the 1 hour time frame. Okay. Bitcoin over here. So we can keep an eye on price action. We'll have the NASDAQ on the right. 1 hour time frame over there. We'll have good old Jerome Powell. And we will go in. Happy days. Okay. Make sure that I'm ahead. All right, and come on. What have I just done? Oh, my days. Can we see that, guys? Are we good? Are we good? Here we go. 1 minute. Should be starting. Let's get this party started, man. Oh, my days. Good old pal. I missed you, man. Missed the old pal. $29. Come on. Come on, pal. Can we increase the size a little bit? That should be all right. Got big. Here we go. Here's the boy. Here we go. No, 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 no. No, 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 no. No, 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 no. Why is it doing that? Why is it doing that? It should not be doing that. That should be stopping. Come on, pal. Hold on. Here's the boy. Are we good with sound?
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state and remains solid. Inflation has eased substantially from a peak of 7% to 2.1% as of September. We are committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. Today, the FOMC decided to take another step in reducing the degree of policy restraint by lowering our policy interest rate by 1/4 percentage point. We continue to be confident that with an appropriate recalibration of our policy stance, strength in the economy and the labor market can be maintained, with inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments.
Here we go.
Recent indicators suggest that economic activity has continued to expand at a solid pace.
Expansion, man.
GDP rose at an annual rate of 2.8% in the third quarter, about the same pace as in the second quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has strengthened. In contrast, activity in the housing sector has been weak. Overall, improving supply conditions have supported the strong performance of the U.S. economy over the past year. In the labor market, conditions remain solid. Payroll job gains have slowed from earlier in the year, averaging 104,000 per month over the past 3 months. This figure would have been somewhat higher were it not for the effects of labor strikes and hurricanes on employment in October.
What a guy.
Regarding
the
the
volume.
hurricanes, let me extend our sympathies to all the families, businesses, and communities who have been harmed by these devastating storms. The unemployment rate is notably higher than it was a year ago, but it has edged down over the past 3 months and remains low at 4.1% in October. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of significant inflationary pressures.
Okay, that's good.
Inflation has eased significantly over the past 2 years. Total PCE prices rose 2.1% over the 12 months ending in September, excluding the volatile food and energy categories. Core PCE prices rose 2.7%. Overall, inflation has moved much closer to our 2% longer run goal, but core inflation remains somewhat elevated.
Uh-oh.
Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we're attentive to the risks to both sides of our mandate. At today's meeting, the committee decided to lower the target range for the federal funds rate by a 1/4 percentage point to 4.5% to 4.75%.
Here we go.
This further recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will continue to enable further progress on inflation as we move toward a more neutral stance over time. We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing policy restraint too slowly could unduly weaken economic activity and employment.
Bitcoin's not moved.
In considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. We are not on any preset course. We will continue to make our decisions meeting by meeting. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains strong and inflation is not sustainably moving toward 2%, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly, or inflation were to fall more quickly than anticipated, we can move more quickly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned 2 goals for monetary policy:
Here we go.
maximum employment and stable prices.
Come on, give me something,
We
pal.
remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
You boring. Gosh, that's so boring. Come on then.
Thank you. Given the expectation that the election outcome will produce policies that would meaningfully impact the U.S. economy next year, how is the committee taking these proposals into account for upcoming decisions, including potentially the next one in December? And can you give us any more sense of how proactive or reactive the Fed is prepared to be to changes in economic policies with the next administration?
Great question.
Sure. So let me say that in the near term, the election will have no effects on our policy decisions. As you know, many things affect the economy, and anyone who writes down forecasts in their job will tell you that the economy is quite difficult to forecast looking out past the very near term. Here, we don't know what the timing and substance of any policy changes will be. We therefore don't know what the effects on the economy would be, specifically whether and to what extent those policies would matter for the achievement of our goal variables, maximum employment, and price
What are you
stability.
reading?
We don't guess, we don't speculate, and we don't assume. Now, just in principle, it's possible that any administration's policies or policies put in place by Congress could have economic effects that over time that would matter for our pursuit of our dual mandate goals. So we, along with countless other factors, forecasts of those economic effects would be included in our models of the economy and would be taken into account through that channel.
Nick.
Come on, Nick.
Chair Powell, Nick Timrose from the Wall Street Journal. Roughly 1 year ago, when the 10-year Treasury was flirting with 5% and 30-year mortgage rates were near 8%, you noted how higher borrowing costs, if they were sustained, could weigh on economic activity. Given that you've said you believe policy is restrictive and the Fed is now dialing back that restriction, are the growth risks presented by higher U.S. Treasury yields today any different from those you identified 1 year ago when inflation was still meaningfully above your target?
Great question, man.
So I would just say this: we've watched the run up in bond rates, and it's nowhere near where it was, of course, a year ago. I guess the long run rates are well below that level. So we're watching that. Things have been moving around, and we'll see where they settle. I think it's too early to really say where they settle. Ultimately, I'm sure we've all read these decompositions of what, and I certainly have, but it's not really our job to provide our specific decomposition. I will say, though, that it appears that the moves are not principally about higher inflation expectations. They're really about a sense of more likelihood of stronger growth and perhaps less in the way of downside risks. So that's what they're about. We do take financial conditions into account if they're persistent and if they're material. Then we'll certainly take them into account in our policy. But I would say we're not at that stage right now. It's just something that we're watching. And again, these things don't really have mainly to do with Fed policy, but to do with other factors in the economy.
If I could follow up, is the September SEP, are those rate projections still valid? Do they still seem relevant given where we are now? You get halfway through the cycle between the last set and the next set. I wouldn't want to comment one way or the other. Let's talk about the data we've gotten since the last meeting. So, in the main, the economic activity data have been stronger than expected. The NIPA revision was stronger. Certainly, the September employment report was stronger. The October report not stronger. Retail sales stronger. So overall, though, I think you take away a sense of some of the downside risks to economic activity having been diminished with the NIPA revisions in particular. And so overall feeling good about economic activity. So I think we would factor that in. At the same time, we got one inflation report, which it wasn't terrible, but it was a little higher than expected. So I think really the question is December, and by December we'll have more data. I guess one more employment report, two more inflation reports, and lots of other data, and we'll make a decision as we get to December.
Data for Christmas, yeah? Happy days. This guy.
Gina Smilik from the New York Times. Thanks for
Gina's
taking our
back.
questions, Chair Powell. When it comes to December, what will you be looking at specifically as you try to make that decision? And then, as of the Fed's economic projections in September, you had written down 4 quarter-point interest rate cuts in 2025. Do you still think that those are likely? Is that sort of the baseline outlook at this point, or has that shifted? And if it shifted at all, can you give a little bit of detail as to why?
Please do.
I can't. We don't fill out an SEP, and I can't characterize one that wasn't filled out today. So I can't really speak for kind of exactly where the committee is. I will just say for December we're going to be, again, at every meeting we're going to be looking at the incoming data and how that affects the outlook. As you know, we're in the process of recalibrating from a fairly restrictive level at 5.33%. After today's move, we're down 75 basis points, and we're asking ourselves, is that where we need to be? You know that we're trying to steer between the risk of moving too quickly and perhaps undermining our progress on inflation, or moving too slowly and allowing the labor market to weaken too much. We're trying to be on a middle path where we can maintain the strength in the labor market while also enabling further progress on inflation. We think that's where we are, but that's the question we're going to be asking in September and in other meetings. And again, I can't really update you on the committee's thinking because we don't fill out an SEP at this meeting.
Yeah, totally appreciate that. I guess when it
days.
comes to your own thinking, do you think that a full percentage
He ain't
point of rate
telling
cuts
you.
in 2025 is a reasonable outlook?
He's not telling you.
Again, we're going to wait and see how things come in December. I mean, it's just,
This
let
guy.
me put it this way. We're on a path to a more neutral stance, and that's very much what we're on. That has not changed at all since September. We're just going to have to see where the data lead us. We have, a whole 6 weeks of data to look at to make that decision in December. Obviously, I'm not ruling it out or in, but I would say, I would say that, again, we didn't update the SEP, so I'm not going to characterize, where the committee would be.
This guy thinks that the date is on a yellow brick
Thanks,
road.
Howard Schneider with
Honestly.
Reuters. I wondered if you could please elaborate, explain a little bit the two changes in the language of the statement here.
Who is that?
In the first paragraph, when you say inflation has made
Who is
progress,
that?
dropping the word further progress. And in the second paragraph, dropping the sentence that the committee had gained greater confidence that inflation was progressing towards its 2% goal. Is there any policy substance behind either of those changes in language? Is it meant to open the door to a December pause? Is it meant to communicate anything about the stickiness of core inflation the last 3 months?
Not really, no. So let me tell you what we were thinking. So the test of gaining further confidence was our test for the first rate cut, right? And so we net that test in September, and therefore we take that test out. If you leave it in, then it's new forward guidance. It's brand new forward guidance. What do you mean by it? Are you requiring yet further? We have to say yes or no at every meeting whether we've made further progress. The point is we have gained confidence that we're on a sustainable path down to 2%. So that I would tell you is what that's really all about. It's not meant to send a signal. Neither of those is meant to send a further signal. And saying further progress, it becomes a test. We don't want to be. We don't think it's a good time to be doing a lot of forward guidance. There's a fair amount of uncertainty in that. In what I've said, the path that we're on, we do know where the destination is, but we don't know the right pace, and we don't know exactly where the destination is. So the point is to find the right pace and the right destination as we go, and I think there's a fair amount of uncertainty about that. And you don't want to tie yourself up with guidance. You want to be able to make sensible decisions as you go.
Steve.
Steve Leisman, CNBC. Mr. Chairman, you talked about higher rates, perhaps from an expectation of higher growth. You didn't talk about it in terms of expectations of higher deficits. Is that something you think might be behind the recent rise in interest rates, and is that are rising deficits a concern to you?
So we don't comment on fiscal policy, and again, I don't have a lot more to say on what's driving bond yields. In terms of policy changes, though, let me give you a sense of how this works in the ordinary case. Let's say Congress is considering a rewrite of the tax laws. Doesn't matter what's in the content. So we would follow that. At a certain point, we'd think we see the outlines, so we'd start to model it. And then we'd wait, and then at a certain point, the staff would brief the FOMC and say, these are the likely effects. There's lots and lots of literature on the effects of tax policy changes on various parts of the economy. So we'd try to get smart on that, and then the law actually passes. And you'd start to put it. You'd probably run an alternative simulation before that happens, just to keep people trying to understand it. Then when it actually passes, it goes into the model, along with a million other things. So, we have a very large economy. Many things are affecting it at any given time. And, a law change of some kind would go in there, but it would go in. But it would, it's a process that takes some time. Clearly, the legislative process takes a lot of time. And of course, the real question is not the effect of that law. It's all of the policy changes that are happening. What's the net effect? And, the overall effect on the economy at any given time. So I think that's a process that takes a lot of time and that we go through all the time with every administration, constantly, and this will be no different. But right now there's nothing to model right now. It's such an early stage. We don't know what the policies are, and once we know what they are, we won't have a sense of when they'll be implemented or all those sorts of things. So I think I would just say we're not doing that now, and all that will take time, and it will be very much regular order when we do that.
If I could just follow up on Nick's question. Are the current rates something you feel like you need to lean against in that they go against the direction of policy by adding restriction to the economy, or do you just take them as a given and perhaps a signal that you should do less?
I just think the first question is how long will they be sustained? If you remember the 5% 10-year, people were drawing massively important conclusions only to find, 3 weeks later the 10-year was 50 basis points lower. So, it's material changes in financial conditions that last, that are persistent, that really matter. And we don't know that about these. What we've seen so far, we're watching it, we're reading, we're doing the decompositions and reading others, but right now it's not a major factor in how we're thinking about things.
Chris.
Thank you, Chris Rugaber at Associated Press. You mentioned the positive economic data that we've seen since the September meeting, including the revisions to things like savings, higher GDP growth. We saw stock market jump yesterday. That's renewed some of the questions about why do many cuts at all in this with this backdrop.
So you're right. As I mentioned, and as you mentioned, the latest economic data have been strong, and that's, of course, a great thing and highly welcome. But, of course, our mandate is maximum employment and price stability, and we think that even with today's cut, policy is still restrictive. We understand it's not possible to say precisely how restrictive, but we feel that it is still restrictive. And if you look at our goal variables, the labor market has cooled a great deal from its overheated state of 2 years ago and is now essentially in balance. It is continuing to cool, albeit at a modest rate. And we don't need further cooling, we don't think, to achieve our inflation mandate. So that's the labor market. Inflation has moved down a great deal from its highs of 2 years ago, and we judged, as I mentioned, that it's on a sustainable path back to 2%. So the job's not done on inflation. But if you look at those two things, we judged in September that it was appropriate to begin to recalibrate our policy stance to reflect this progress, and today's decision is really another step in that process. Overall, as I mentioned, we believe that with an appropriate recalibration of our policy stance, we can maintain strength in the labor market even as our policy stance enables further progress toward our inflation goal.
Great. And just to follow up, what might cause you to pause rate cuts in December? What kind of economic data would lead you to that path? Thank you.
So we haven't made any decision like that at all. But we're in the process, as I mentioned, of moving policy down, our stance down over time to more neutral level. And as a general matter, as we move ahead, we are prepared to adjust our assessments of the appropriate pace and destination as the outlook evolves. So, for example, if we were to see the labor market deteriorating, we'd be prepared to move more quickly. Alternatively, as we approach levels that are plausibly neutral, or close to neutral, it may turn out to be appropriate to slow the pace at which we're dialing back restriction. Again, haven't made any decisions about that, but that's certainly a possibility. If you can think of it as similar to what we do with asset with asset runoff, with QT. So we reach a point where we slow the pace, much like an airplane reaching the airport slows down. And so we're thinking about it that way, but it's something that we're just beginning to think about.
Edward.
Thanks, Chair Powell. So
The boring FOMC.
With the noise in the jobs reports that we've seen, and you look at the Fed's favorite inflation, PCE inflation, overall it's 2.1%, very close to the Fed's target, but core inflation is 2.7%, and it's been that way since July. So why doesn't this data give fuel to a rate pause for this meeting?
Well, so I think if you look at the 3 and 6 month, you're quoting the 12-month. So we look at all of them, right? But if you look at the 3 and 6 month core PCE, you'll see they're around 2.3%. So we look at all of them, and we also look at 12 as well. But what it's telling us is that we really have made significant progress, and we expect there to be bumps. For example, the last 3 months of last year, the core PCE readings were very, very low, probably unsustainably low. So that's why forecasts generally see a couple of upticks toward the end of the year. On the other hand, the January reading certainly looks like an example of residual seasonality, so that we saw last year. So when that falls out of the 12-month calculation in February, we should see a thing down. So it'll literally be a bump up and then down. We understand that. Overall, you see the progress on inflation, and you also look at the economy and you say, what is the inflation story now? Where's it coming from? So I point to a couple of things. One is the non-housing services and goods, which together make up 80% of the core PCE index, are back to the levels they were at the last time we had sustained 2% inflation, which happens to be in the early 2000s for a period of 5, 6, 7 years. So they're back to that level. What's not is housing services. So let's talk about housing services. Housing services is higher. What's going on there is, market rents, newly signed leases are experiencing very low inflation. And what's happening is older, leases that are turning over are taking several years to catch up to where market leases are, market rent leases are. So that's just a catch-up problem. It's not really reflecting current inflationary pressures. It's reflecting past inflationary pressures. So that's one thing. The other thing is, I'd say look at the labor market, not a source of inflationary pressures. Where's it coming from? It's not a very tight economy. What is the story about inflation? You see that catch-up inflation also in insurance and several other areas. So you're seeing, we're not declaring victory, obviously, but we feel like the story is very consistent with inflation continuing to come down on a bumpy path over the next couple of years and settling around 2%. That story is intact, and it won't be 1 or 2 really good data months or bad data months aren't going to really change the pattern at this point now that we're this far into the process.
So you're quickly trying to get to that neutral rate that you see, or do you foresee that you have some time to get there?
Nothing in the economic data suggests that the committee has any need to be in a hurry to get there. We are seeing strong economic activity. We are seeing ongoing strength in the labor market. We're watching that carefully, but we do see maintaining strength there. And so we think that the right way to find neutral, if you will, is carefully, patiently. Again, that's not meant to have a specific meaning, other than to the extent the economy remains strong, we have the ability to take advantage of that as we try to navigate that middle path between the two risks.
Craig.
Hi, Chair Powell.
I'm not
Craig
getting
Torres
nothing from
Bloomberg.
this, man.
2 questions today. Did you learn anything about what Americans think about the economy from the election results? First question. Second question. I want to talk about some labor market indicators, and I do so with great respect for your attentiveness to the maximum employment side of the mandate, Chair Powell. So the unemployment rate has been at 4% or higher for 6 months. One of the broadest measures of unemployment is up about 0.5 point from a year ago. Compensation gains are sliding back. The quits rate, a signal of labor market dynamism, has been heading down to that bad neighborhood of the 20 teens. So you have put a marker at Jackson Hole saying any further cooling is unwelcome. It is cooling generally a little bit further. So at what point do we reach what you would describe as a shortfall from maximum employment? Thank you.
Sure. So on your first question, I'm not going to talk about anything that relates directly or indirectly to the election. On the second one, This is the great question, and so when we think
this
about all
is
the time.
starting to
So,
get a little bit
I'll just say a
frustrating,
couple
ladies and
things.
gentlemen.
There's nothing really surprising here. What we know is that the unemployment rate is low. We also know that it's come down significantly, moved up significantly from a year or so ago. So we've seen a big change upward in unemployment. Sometimes that has meant bad things. So far, it doesn't appear to be. It appears that I wouldn't say that the labor market has fully stabilized, because I do think it's continuing to very gradually cool, but it seems to be in a good place. And our policy, of course, is designed to keep it in that good place, to maintain the strength in the labor market, while also enabling further progress on inflation. You mentioned a bunch of indicators, and you're right. The openings to unemployment rate is back to a normal level. I would characterize it more broadly as normalizing. You mentioned wages. Wages are still running just a bit above where they would need to be consistent with 2% inflation, unless productivity is going to remain at this high level. If we see productivity, more sustainably at these high levels, then that would sustain higher wage gains. So I would say, in fact, you can say it the other way, that wage increases are now consistent with 2% inflation, given current productivity readings. But of course, the lore on productivity readings is whenever you see high readings, you should assume they're going to revert pretty quickly to the longer-term trend. That has always been the case for 50 years. But it may be that we're now 5 years. If you look at the NIPA revisions that came out a month ago, we're 5 years into a nice set of productivity readings, which are sustained and very healthy. But overall, it's a good labor market. We could talk about 20 different data series. We'll be looking at all of them, of course. We don't want the labor market to soften much from here. We don't think we need that to happen to get inflation back to 2%.
Victoria.
Come on, man. There's nothing happening with this.
Victoria Guido with Politico. Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Yeah, baby.
Can you follow up on, do you think that legally you're not required to leave?
He ain't going nowhere. Look at his face.
Mike?
Michael McKee from Bloomberg Radio and Television. You talk a lot about what the data are telling you and how you are dependent on the data. But in terms of forward-looking assessments of the economy, what are you hearing from CEOs or other officials around the country? What did you hear today from the regional bank presidents about what companies and consumers think about where the economy is going from here rather than looking backwards? And does that match up with what your forecasts have been and what you think the appropriate policy path should be?
So it's hard to characterize a really interesting set of discussions we had, and of course you'll see them in the minutes in 3 weeks. But I would say this: I think the comments from our Reserve Bank colleagues and from the CEOs that they talk to are pretty constructive on the economy right now. Pretty constructive, feeling that the labor market is back to normal, to the point where it's no longer that much a discussion topic in their worlds, whereas 2 years ago it was all they were talking about. So they feel like the labor market's in balance. People feel good about where the economy is. Demand is obviously pretty strong, and you're seeing 2.8% growth in the third quarter estimated. Maybe the year's 2.5%. This is a strong economy. It's actually remarkable how well the U.S. economy has been performing with strong growth, a strong labor market, inflation coming down. We're really performing better than any of our global peers, and I think that is reflected in what you hear from what I hear people hear from CEOs. I don't get to talk to a lot of CEOs in my job, but I hear what others summarize from those. And of course, I hear the Reserve Bank presidents do a lot of that, and it's pretty constructive overall. Now, that's not to say there are areas of caution and things like that, but ultimately, overall, pretty positive.
Well, to follow up, the areas of caution, if there were black clouds on the horizon that you identified as something you're watching, what would they be?
I think it's, it's things like, clearly...
You know what, guys? This FOMC has been absolutely shocking. They've not given anything. We know he's not quitting.
Now, that can change through the price of oil or otherwise, but people talk about those as, something that's on the horizon all the time. But, ultimately, if you look at the U.S. economy, its performance has been very good. And that's what we hear from business people, and expectation that will continue. If anything, people feel next year, I've heard this from several people, that next year could even be stronger than this year.
Andrew.
What did he just do?
Hi, it's Andrew Ackerman with the Washington Post. I just wanted to follow up on the discussion earlier on fiscal policy. Your predecessors, Greenspan and Volcker, spoke up loudly when they thought large budget deficits endangered economic or financial stability. Will you do that too? And right now we're in a period of full employment. We have large budget deficits and debt at historic highs that are rising. Is that something you'd speak out against?
So, I have said many times, no more, no less than what the predecessors you mentioned have said. And what that is that the U.S. federal government's fiscal policy is on an unsustainable path. The level of our debt relative to the economy is not unsustainable. The path is unsustainable. And we see that in, you've got a very large deficit you're at full employment, and that's expected to continue. So it's important that we, that to be dealt with. It is ultimately a threat to the economy. Now, I can say that. I don't have oversight. We don't have oversight over fiscal policy. I've said it on many occasions, just said it again.
Okay, thank you. I guess the other question is, to follow up on Victoria's question, do you believe the president has the power to fire or demote you, and it has the legality of a president demoting at will any of the other governors with leadership positions?
Not permitted under the law.
Not what?
Not permitted under the law.
Thank you.
Courtney.
They really want to get rid of him, man.
Courtney Brown from Axios.
Here we go.
In response to Howard's question, you said it wasn't an ideal time to give forward guidance because of the economic uncertainties. Can you lay out what some of those uncertainties are and whether or not it includes some of the proposals that the president-elect has put out on the campaign trail? Tariffs, for instance?
No, I was not referring to the new administration's policies at all, nor will I today.
He's making it clear, man.
What I'm just saying is, as we look ahead, we know, and I mentioned this in my statement, that the risks are two-sided. I guess I should start by saying that we think that the economy and we think our policy are both in a very good place, And but as you look forward, you say, what are the risks? And one risk is that we would move too quickly and find ourselves having moved too quickly, and inflation comes back, and we lost our chance to get inflation back to 2%. So we have to avoid that risk. And to avoid that risk, that means you want to move carefully. The other risk is that we move too slowly, and that we allow the labor market to weaken too much and do unnecessary damage to the labor market and to people's working lives. That says don't get behind the curve. So these two things are the two risks that we have to manage, and so we're in the middle there. We try to be in the middle and deal with manage both of those. Again, the idea is to support the strength we have in the labor market and in the economy, but also with somewhat less restrictive but still restrictive policy, enable further progress toward our 2% inflation goal. This is a thing where we're meeting by meeting, we're going to be making our assessment of what the right path is. It's not as important, the precise timing of these things is not as important as the overall arc of them. And the arc of them is to move from where we are now to a sense of a more neutral policy. We don't know exactly where that is. We only know it by its works. We're pretty sure it's below where we are now. But as we move further, there will be more uncertainty about where that is, and we're going to move carefully.
You know what, ladies and gentlemen? That is the biggest load of shock I have heard in my life. I can't believe what I've just watched. Honestly, there's nothing that... NASDAQ's just pumped. Bitcoin's had the day off. Speakers are boring. They're only interested if he's going to quit or not. The only dude that asked a decent question was the guy from the Washington Post, Tim, or Nick, sorry. Other than that, that's it. What a boring FOMC, honestly. I've never witnessed anything like that. My days. Honestly, that's really cheesed me off. Literally wasted time. So NASDAQ's made a nice move to the upside, okay? Bitcoin's done nothing. It's just come back up. So now that FOMC's out of the way, we can just go over to the news itself, have a look at what everybody's thinking and saying. Here we go. 1 or 2 bad data months on inflation won't change the process. Okay, so that's probably why the market has been pumped. Okay, but it's 1, 2 bad data on the inflation won't change the process. No need to be in a hurry to get there. So that's him effectively saying pause. You know, that's what that is effectively saying. So if they're pausing the rates, that's kind of good in one aspect, but the market doesn't care. They don't care. It really doesn't care. It's the story of don't fight the Fed. Where are the yields right now? Yields have come back down. That's good news. The 10-year bonds marginally moving up. Dollar dominance coming back down again. Stocks are loving life. Nvidia's loving life. And Bitcoin is just doing its own thing. You know? Interesting. Really interesting story, man. Interesting story. It's just the FOMC's done it for me. You know? There's nothing there for us. There's nothing there for us at all, guys. So going into it all with the price action of Bitcoin, all right, more than likely going to want to try and recover some of this wick. So just take that into consideration. They have been moving up all day, so there is more than likely going to be some form of consolidation. But into tonight, Asian session, there's going to be a bit of a... They're going to be reacting to the news itself, but we actually haven't heard anything, to be fair with you all, you know? So... with that being said, guys, I hope you enjoyed that. Make sure you're liking, subscribing on the way out, gang. All right? And I'll be checking in with you all tomorrow for final stream of the week. Other than that, guys, pay yourselves and thank you so much. And mad love for sitting here with me, listening to that dead behavior. All right? Take care of yourselves, gang. Winked again. Waste, man. Catch you in a bit, people. Peace.